So hello and welcome to this week's edition of the Books Crypto Club catch-up on Zoom. It's Sunday the 21st of February and today we're going to be talking about whatever. Never really know with these sessions, they're not pre-arranged or anything. We just get together and we talk about what interests us. But I have a feeling that Bitcoin, Ethereum, Ripple and DeFi are going to feature tonight. So hope you enjoy the session. If you did, click on that subscribe button, click on the like, do whatever else the YouTubers do. And tune in, listen in, and hope you enjoy it. Yeah. Well, looks like you're in now. Hey, Mark, good afternoon to you.
How you doing?
Hey, good, thanks. How's your day?
Yeah, it's been good, thank you. Yes, yours?
Yeah, keenly watching Bitcoin going up, down, sideways, and everywhere.
Well, it's been quite an interesting week, actually.
Yeah.
It's risen quite a bit.
Well, I know when I put the post out during the week on the WhatsApp group, because I could see what looked like a fairly clear sign that something was about to happen.
Yeah, it's quite a clear wedge, wasn't it?
Yeah, and so it's a classic thing that when you see a wedge like that, you know something's going to happen.
Who knows what, though?
But you don't know if it's up or down, and as it was definitely up.
Yeah.
And I think it's been quite active today. It's been going between 55 and 57, I think, today.
Last time I checked, it was up 1% on the 24-hour chart. So yeah, it's looking good.
Excellent. Hey, Leslie, good afternoon.
Hiya.
Hey.
How are you doing?
We're good. Yeah, how are you today?
I'm fine, thank you. I've been watching the Bitcoin price. I just wonder when it's all going to end. And to be honest, I was expecting you to have your laser eyes on today. Have you not got, I see all these people on Twitter, you know, got their laser eyes waiting for, what, 100K? Is that what it is there?
It kind of varies. Yeah, I'm on a few other Signal and Telegram and WhatsApp groups, and they're talking about what is the next crypto superpower. So we've already moved on from laser eyes.
Have we? Okay.
We've gone on to ESP, which is where you basically know what everyone's thinking and that kind of thing. So, but yeah, it's interesting. It's as I was saying to Mark just before when I put the message out to the WhatsApp group during the week, where I saw there was a particular technical analysis trend that was happening, a particular pattern, which usually means that something's about to happen. And sure enough, something did happen, but you never know what that something is.
No, I know.
It's like the alarm bell goes off of something's going to go up, down, or sideways. So,
just out of interest, do you use TradingView for your charts?
I tend not to. No, I just pop into Binance usually. And
I see. Okay, but they use TradingView essentially for their visualizations.
Yeah. So it comes out the same, but it's something I've probably forgotten more about technical analysis than I ever learned. You know, I used to be quite into it for shares and that kind of thing, and started using it on crypto. And so there are certain behaviors and trends and signals that you notice, but they don't necessarily work in crypto.
Yeah, sorry, John.
Sorry, go on, Mark. Yeah.
I was going to say it's quite interesting how one might trade it, whether you are just looking at the TA or whether it's like, let me understand the project, what's going on, almost like in the same way you'd analyze a business as to, you know, are they releasing information or, you know, is there truly some good fundamentals behind the project?
Yeah, and I'm in a minority on that because everyone else says, oh, you know, read the paper, learn about the team, understand the industry, look at what the problem is, to try and solve it, all this kind of stuff. I think it's irrelevant. You know, ultimately, we're all trading in Pokemon cards, and it's whether, you know, people particularly like this Pokemon card or that Pokemon card. It's not whether the Pokemon card is made on a laminated substance or whatever.
Or is it a shiny card?
Yeah, exactly. You know, I mean, it's kind of bizarre. And when you look at what seems to affect crypto prices as well, there's no proof that it's anything. You know, one of the very, very few things I've seen where I would be comfortable to acknowledge, yes, that affected the price of crypto, was the announcement by Tesla that they had 1.5 billion of Bitcoin, because kind of the minute that came out, you saw the chart start going zzz. But even with that, it was funny. The number of people who then said, oh, look, that shows Tesla have just bought Bitcoin. It's like, No, they bought it weeks or months ago. But that's just that they announced it, and that's what had the impact. So anyway, what do others think?
I just think the market is so immature and so new that you can't apply traditional analysis, if you like. I mean, it works sometimes it doesn't. As you say about, is the project good or not, you can kind of read a bit into that, but probably not too much. And in the end, it's just what's kind of flavour of the month or flavour of the moment.
Yeah,
and you just hope that the coin that you're in is flavour of the moment for lots of moments.
Mm-hmm. Yeah, Leslie, what are you going to add?
Well, to answer your question, I think, partly it's about analysis and partly it's about, the team and all that stuff. I also think it's a lot to do with regulation and where those people setting regulations, what they think about it. And if obviously the more regulation, we'll see an impact on it.
Yep.
But I did have a question for you, which is kind of related, because obviously we all know that Bitcoin is in theory a limited supply, and all these miners, the halving every year or every couple of years or whatever. And so at some point it will all be mined, so to speak. And what do you think will happen at that point?
Well, I kind of look at it a little bit short-termist, in that by the time it happens, I'll be dead. So I don't really care.
Okay, fine.
So that's a pragmatic thing, because it won't happen for 100 years.
Oh, will it not? Okay.
It was quite interesting though. Michael Saylor, he was talking about this, and there was some really good discussions from hope.com, which is MicroStrategy's website, and he was like, well, he's buying Bitcoin in the sense like you're buying gold, in the sense that you are going to buy it and not sell it on.
Mm-hmm.
Okay, and so you could then borrow against it and things like that, and keep the wealth within the organization, and never have to sell it on, and just keep that wealth in there. So he's certainly got a long-term view, with the view that it's still going to hold its value, and if anything, it's going to go further up.
Yeah,
which is quite interesting.
I think coming back to the limited supply type thing, there's 21 million. It's kind of arbitrary in a way, because everyone's saying, oh, there's only 21 million, blah, blah, blah. But it's like there is only so much gold. You can keep mining it, and eventually it becomes economically unviable. And that's what increases its value. But what you can do is, instead of having a gold bar, you can have a gold coin. And if you can't afford a gold coin, you can have a gold ring. And if you can't afford a gold ring, you can have a sliver of gold. And if you can't afford a sliver of gold, you can have a piece of paper that represents a fractional ownership of a piece of gold. So it's exactly the same with crypto. With Bitcoin, people are talking about 21 million Bitcoins. Yes, but one Bitcoin in value can be sliced into 100 million Satoshis. So, that's pretty small slivers. And that's what kind of irritates me at times, when people talk about, oh, well, there aren't enough Bitcoins to go around all the millionaires in the world. It doesn't matter. It's irrelevant, because it can be sliced up. And the other thing is that what you're probably going to see as well is this idea of, even if you think about how many 21 million times 100 million Satoshis is, well, ultimately you could end up with a derivative scheme whereby you've got fractional ownership of a Satoshi. So ultimately you could slice it and slice it and slice it and slice it. So there's no true limited amounts.
So I guess if it does hit the $15 million, which is what has been purported that it might reach at some point in time, everyone will be then trading in Satoshis rather than in Bitcoin itself.
Exactly. Yeah. And that's the whole thing. It's what your unit of measure is. Mm-hmm. So, in the days of gold, the unit of measure was initially an ingot of gold. But, and these days, I think they do it in, is it kilos, or is it whatever it is now? But that doesn't mean that you only trade in those. So Mark's right that you'll be able to trade in far smaller amounts. The other thing, though, going back to the theory of when all the Bitcoin have been mined, that the principle then is you then switch to a model where the miners get rewarded for processing the transactions. so that the concept of a secured network through mining still works. It's just that they don't get Bitcoin anymore, they just get transactions. Now, I think that might actually be the thing that spurs an interesting change much sooner than 100 years. Because every 18 months you get a halving? Like, I can't even remember.
4 years, wasn't it?
4 years.
4 years, sorry. So every 4 years it halves. So currently it's 0.25 Bitcoin. So it'll be 3.125 and then 1.6 point whatever. There must come a point where the fees that the miners are getting out of the transactions,
it's just not worth it,
exceeds the reward that they're getting for mining it. So it's still worth mining, but it's not worth mining for the Coinbase that they get.
Unless, of course, the value continues to increase.
Yeah.
But then I guess you don't. Sorry, carry on. Sorry.
I'm just trying to work out, when this supply is, when you get to that point where it's not worth mining anymore, or when you have mined everything, what is going to hold the value up? I mean, I'm already starting to hear negative things about Bitcoin. It takes enough electricity to I don't know, the same equivalent of running the Netherlands or something like that, or one of these kind of countries, So I'm already starting to hear quite negative things about it.
So I've heard that from day one, to be honest. Bitcoin is going to cause global heating and all the polar bears are going to lose their homes, type of thing. But I cover it in two ways. When I'm doing training on this, I point out that yes, the current method is incredibly inefficient. It is intended to be a major consumer of power, but just like any other technology, initially it tends to be very, very inefficient. So I always use the example of, and I might have asked this question here before, do you know when the first motor vehicle was?
You asked that last week and I still can't remember.
1905, I don't know.
1880 or something, wasn't it?
17 something.
Come on, you're both on the call last week and I gave you the answer. And
it was 17 something, but I did afterwards think it depends on your definition of what a car is.
Oh no, I said motor vehicle. Yeah. Okay. So the first motor vehicle was 1769.
I got 17.
And it was a steam-powered tricycle, which ran at 2 miles per hour, carried 4 people, and had a range of about 15 minutes. So incredibly inefficient, incredibly unproductive, amazingly poor use of resources, and so on. And then you compare it to now. You look at the fuel economy of a modern petrol or diesel or electric vehicle transformation. Now, the same is going to happen with crypto. Whether you switch either from proof of work, which is the current computationally expensive method, to something like proof of stake or proof of elapsed time or another proof. But you've also got the thing as well that the chips that are being used to do the mining are becoming more efficient in their use of electricity as well. So the cost of that's coming down. But you're right, there is this thing at the moment that, and it is, I think the Cambridge Centre did the research where they estimated it's consuming about the same amount of electricity as the Netherlands at the moment. Do you know what consumes twice that amount of electricity?
Probably Santander's banking system. Or any other banking network system.
Yeah, well, I do sometimes say if you look at the SWIFT network, which all the computers work on, probably, but in actual fact, it's been estimated that twice that amount of electricity is consumed by devices on standby in the USA. So, like TV sets and this kind of thing. So there is an awful lot of waste of electricity, that type of thing. And the difference between the two is that in America, a lot of the power that's going to power these devices that are on standby is coming from non-renewable sources. They are doing a lot more wind farm stuff there, but a lot of it is still traditional burning. Whereas a lot of the Bitcoin miners are intentionally located either in geothermal locations in Finland or Scandinavia or Iceland or whatever, or are next to hydroelectric dams and power in China and Mongolia, whereby they're actually using pretty clean energy that wouldn't otherwise be used. It was thought a couple of years ago, the reason that China was doing so much of the mining was because they did some really good negotiation on the price of the electricity, because there was nothing else to do with the electricity. You know, they were producing it, and the Chinese factories are already closing down and not consuming it, so it's just being wasted. So it's a lot more subtle than just the, oh, you're burning more electricity than the Netherlands. But I do think it will change. But it is a valid concern. You know, but it's one that I've heard for the last 6-7 years. So we'll see where it goes.
Do you think there could be a split between the payment network, or the actual network of Bitcoin, and then the storage of value? Could there be, you know, a separation of that in due course?
I think we have it already, because I think a lot of people are thinking of Bitcoin as being a store of value, and cryptocurrencies like Litecoin and Bitcoin Cash as being means of transactions. So if you look at what JP Morgan's done with JP Coin, and a few others doing with some settlement coins and that anything that is for payments and transactions seems to be one thing. No one is developing an alternative store of value coin. You know, Bitcoin seems to be the one that, if you want to stick it away for a rainy day, that's the one to go for. So I think we're seeing that separation already in some ways.
Sure.
What would happen to Bitcoin if an altcoin overtook it?
In terms of what? That could happen. You know, the Bitcoin dominance is currently, I think it's up to about 70%.
Yeah, 60 to 70, isn't it?
Yeah, it never seems to go below 60%. But, you know, if there is at some point, there is the new super deluxe laminated Pokemon card that everyone loves for some reason, either because the transaction speed improves, or because someone's bought a load of them, or because there's some other economic incentive, then yeah, another token or another cryptocurrency could come in. Ethereum was always the one that was thought of in that way, but I think Ethereum carries the risk of being a victim of its own success. That Ethereum is a brilliant platform, and not necessarily an ideal cryptocurrency. The cryptocurrency is almost an aside anyway. So maybe there will be another cryptocurrency that comes up, you know, like Dash or Litecoin or whatever, that overtakes in popularity.
So do you think maybe Litecoin it's got a strong future, even though it's a lot less value, and people say it's about to die kind of thing, even though it's been pumping quite a bit?
Yeah, so this is where it comes down to where people are talking about investing in these things, and the idea of portfolio theory and diversifying a little bit. But I do think there is value in considering not putting all of your money into one thing, and, you know, just hedging yourself a little bit of, you know, or maybe Ethereum could grow, maybe Litecoin could grow, whatever, as opposed to just betting on the one thing. Because I suspect when it happens, if there is a sudden switch to another favored cryptocurrency, it'll probably happen faster than most people are able to react. You know, and so it'll be oh, wish I'd noticed that.
And probably while you're asleep in bed as well.
Yeah.
That's
yeah. But yeah, there is that possibility that, you know, Bitcoin's been the mainstay. It's got the credibility and background, that kind of thing. But something else could come along one day and overtake it. Absolutely.
I've seen wrapped Bitcoin, and I'm just looking at Huboy Bitcoin. What's the idea behind those? Because they're pretty much at the same value, but not quite at the same value.
So a wrapped Bitcoin, if I remember correctly, is a representation of Bitcoin on the Ethereum network. Is that right?
So does that mean you can trade effectively? So you could trade them on the Ethereum network?
I can't remember how you use them. I've not been close enough to wrapping in that, but my understanding is it's effectively a derivative that wrapped Bitcoin allows you to trade Bitcoin but through Ethereum in some way. So if you think about one of the problems with Bitcoin is that the fees for buying and selling it are getting higher and higher. So if there was a way of you trading Bitcoin without going through the main Bitcoin mining process and that, which gets the fees down, then that's an alternate way of doing it. So I think that was the idea behind Wrapped Bitcoin, that it's effectively a way of trading a Bitcoin equivalent. Right. I may be wrong on that though. Do go away and read.
Sure,
that.
Yeah, I will do. I'll have a look at it because I did wonder because I always look at CoinGecko. I use that and I do the which one's of the highest value and let's see which one else is there. The market cap is quite different between them, but yeah, the value is price is relatively similar. There's only a couple of £100 between them. So yeah, that's quite interesting. I wanted to know what your thoughts were around it.
Yeah, it's one of the problems with this stuff, that there's so much to look at, because you're right, there are things like Wrapped Bitcoin, there are wrapped tokens on the Ethereum network representing Bitcoin. There's the whole DeFi space with things like Uniswap and that kind of thing. I can't keep up, so I just turn around and I'm honest and I say I don't know.
Sure, cool, that's fine.
I think there's there's a lot going on. You could spend 24 hours a day thinking, reading up this stuff and still wouldn't be able to grasp it all. Gary, did you have Ripple was a big thing back I don't know, about a year ago, XRP, and I never actually caught up on what happened to it. Obviously, it's something bad has happened in that space. What do you know the background?
So from what I can recall, there's a court case ongoing with it, with the SEC.
There was.
Go on, John.
So I'm a big XRP fan. I've been ever since I first got into crypto. And Jay Clayton, who was the chairman of the SEC until December the 23rd, the Trump appointment. December the 22nd, after 8 years, he finally filed the claim in the courts against Ripple and two of its executives. So that was filed a day before that leadership team of the SEC left, which is a rather a nasty thing to do to the incoming team. But so yeah, that's the thing that's hanging over the head of Ripple and XRP. Tomorrow could actually be quite an interesting day. So it's all starting to kick off with pre-trial hearings. Interestingly, the SEC in their complaint have not asked the courts to actually declare XRP as security.
Okay.
Which is a slight puzzle. Interestingly, Ripple, in its defense, has asked the courts to declare whether it's a security or not. So you can kind of read into that what you want. But that's the big thing that's hanging over its head.
So
an ongoing situation.
Is it a security or not?
So I was going to offer, so that the short-term thing is certainly around the court case, but in the meantime, a number of exchanges have kind of distanced themselves from Ripple, and so they've delisted XRP.
Yeah.
And that thereby makes it a little bit more of a challenge anyway of where can you still trade it, and that gives you liquidity problems, which.
Well, except that's only exchanges operating in the US.
Okay.
So if you're an investor or you want to buy XRP outside the US, you're not affected. In fact, most of Ripple's business is outside of the US. So one of the so Ripple have suggested that they're quite happy to move abroad outside the jurisdiction of the US, so whether it's Singapore or even the UK, possibly, but probably Singapore, somewhere like that.
Well, I think it's when you look at the provenance of the biggest exchanges. So you look at like the major companies in the space, Coinbase and Binance, for example. I think Binance does something like 7% of the world's crypto at the moment. So I think Binance and Coinbase have delisted XRP, and I think Kraken has as well. I don't think Kraken is a US exchange. It's sometimes difficult to work out where these things are domiciled. But the other problem is going to be, and some of even the offshore crypto exchanges realize this, that the length of the arm of the SEC can extend well beyond geographic boundaries. And so there is always this risk that, even if you're domiciled in Singapore or whatever, that if the SEC or any other federal agency decides that they want to pursue you, then they still do. And so I think they're being nervous about that.
One of the interesting things with XRP and Ripple, though, is that the Department of Justice and FinCEN, which is the Financial Enforcement Agency, and the other regulators in the US, both declared it a virtual currency as far back as 2015. So there's kind of a suggestion that it's almost an internal power struggle between the different regulators, of which I think there's 5 or 6 different regulators.
It's more
in the US, so it's a real mess over there, and it's perhaps the biggest complaint against the US at the moment. That whereas most other countries have come to the conclusion about what a cryptocurrency is, the US still hasn't decided.
I was at an event, I think it was about 2 years ago now, and there was a US crypto lawyer presenting, and he was saying exactly that. One of the problems you're getting is that there are so many federal regulatory authorities who are having a turf war. Is this a security? So it comes within SEC. Is it money? Does it go within the DOJ? So you've got all I think he listed, I think it was 13 federal regulators who have an interest in cryptocurrencies. And then for those who don't know, the USA operates a multi-level legal system whereby you've got federal regulation, which covers the whole country, and then you've got state legislation, which covers just each state. So in addition to having 13 countrywide regulators, you've then got 50 state-level regulators as well. And sometimes within the state, there are multiple regulators as to what they're responsible for. So they're all fighting a turf war as to whether they want a piece of the action in order to be able to control it, or if they want to stay clear of it. So different states are either being pro-crypto and trying to encourage it so they can regulate it. So New York kind of was the opposite almost. New York was one of the first states to put in place regulation that almost completely killed off any crypto activity in New York, where they insisted on anyone offering services in crypto had, I think they called it a bit license, or the equivalent of a license to deal in this. And very, very few companies applied for them. I think there was about 3 or something in the end. Most companies just re-domiciled because it's pretty easy to not operate out of New York and go to Delaware or something instead. So an interesting space. It makes the UK, where at least we've got the Bank of England that looks after both PRA and FCA, and that's it for financial regulation. Pretty simple, really. But then even with that, you've then got the taxation side of things, which is HMRC. You've got HM Treasury takes an interest because that's got the oversight of HMRC. You've got government agencies in there. But compared to America, that's why I think once you work in America or you work for an American company, you suddenly realize why it's called the United States and not United America. So, was that answering the question? Oh, that was Ripple, wasn't it?
Yeah, it was. To be honest, yeah, that was a useful update. Thank you.
Yeah. So yeah, it's a matter of keeping an eye on the press and seeing where this case goes. Because yeah, it was quite interesting. And did Ripple have something going on with Corda as well, John? Can you remember?
Yeah, there was a legal case. So,
with R3.
R3 and Corda is the settlement mechanism. So R3, going back a few years, I can't remember the guy's name that runs R3. they were meant to be a partner of Ripple in terms of bringing the R3 customers that they had on their books at the time into the Ripple network. And the argument was that R3 didn't deliver what they said they were going to deliver in terms of the number of customers, but still wanted their 5 billion XRP in payment, claiming that they had brought what they were meant to bring. The interesting overhead to that, I think, is that both R3 and Ripple, a major investor in both, is SBI, which is a major banking conglomerate in the Far East. And the upshot of that was that, I think probably about a year ago, 18 months ago, basically SBI banged heads together and said, sort this out. This isn't to the benefit of either of you by going through the courts about whether you're entitled to the 5 billion XRP or not. Sort it out because you can both benefit by working with each other rather than against each other. So I think that got resolved privately.
Is SBI the investor in WeWork as well?
I'm not sure. Possibly. SBI is huge.
Yeah.
Absolutely massive across sort of Far Eastern countries.
Yep.
That's not the State Bank of India. Is that a different organisation?
No, it's different now. This is
okay.
I think they're headquartered in Tokyo. I think they operate in Vietnam, Cambodia, Taiwan.
It's certainly Asian based, and they are a massive investor. But I seem to remember, I'm fairly sure, and no, Chris, I'm wrong, but I thought SBI was the major investor in WeWork as well, which started having a few.
Or was that SoftBank?
Ah, yes, you're right. Yeah.
Yeah.
There you go. I had a feeling I was wrong. Yeah. But yeah, Mark, I think as well for India, it's RBI.
Right. Yeah, the Reserve Bank of India. They are saying a lot of stuff. You can't get money in and out.
Yeah, and in India is another place worth keeping an eye on at the moment because of that, because they've gone through various phases of declaring whether cryptocurrency is permitted or not, and they certainly went through a phase where they basically said cryptocurrency was illegal. Then they changed their mind. Then they weren't quite sure. Then there was a case that went through the Supreme Court, which said cryptocurrency isn't illegal. And so everyone thought, oh, that's great. That means we can start doing crypto. And now there's talk about a potential bill coming through, which could make privately owned or privately operated cryptocurrencies illegal.
I'd be quite intrigued to see what they're going to be using as their kind of base, like technology behind the currency. As to, are they going to, nick something else and just rebrand it? Or
well, the reality is that where various governments and banks are looking at a central bank digital currency, it is actually a central bank digital currency. It's not a cryptocurrency usually. And for some reason, a number of conversations I end up where people are talking about cryptocurrencies and they say, and as an example, central bank digital currencies. Digital currencies and digital money are not the same as cryptocurrencies because of the nature of it. You don't need a blockchain to manage your production and control of your.
It's just a central ledger, isn't it? It would just be a central ledger and that's it.
Yeah.
There's no mining. There's nothing. You just print. Yes, let's make more money and let's go.
So it's basically computerizing what they do already. Which is the whole thing of the bank creates an entry in a ledger to say we now have £100 million, and we now make another entry in the ledger to say and Barclays Bank have borrowed it, and then Barclays Bank through fractional reserving can use that as a multiplier to go and lend it out to other people, or rather the commercial banks can to then the retail banks and so on. Yeah. So it's quite funny as well when you speak to people who work in the traditional banking world, and they're all talking about, oh, Bitcoin, this mining. So you mean Bitcoins are created out of thin air? And you go, yeah, that's just like pound notes. And they go, what? Exactly the same. Just an entry on a ledger somewhere that someone's created.
Been a long time since I saw a pound note.
Yes, yeah. You're right. Sometimes I use the phrase pound notes, and then I remember that the lowest one is a fiver now. Sometimes in some of the sessions I want to talk about, you still have it on a fiver. Do you know the wording on it where it says, I promise to pay the bearer? Yeah. Do you know what the promise is?
It was the equivalent of the gold. No? It used to be before it became off the gold standard.
The gold standard, yeah.
Yeah. Do you know what they promised to pay you when it came off the gold standard?
Another piece of paper.
Yeah, but basically, if you go to the Bank of England and you hand over a £5 note, then they promise to give you £5. And that's it. I love it. You have this conversation with people who go, some of them still think we're on the gold standard for some reason. Some people think we've moved on to a silver standard. And you say to people, yeah, what is the promise to pay the bearer? What will the Bank of England give you if you hand over £5? And the answer is they promise to give you £5. So it's
which is what? Which is what? The same £5 note back again?
No, I'm not actually sure of the absolute rules to whether it has to be £5 in lower denomination or something. So you might get it in coins, or you might be that they just issue you with a new note. I think I'm actually keeping a £5 note at the moment. I think, yeah. So watch out for these. Oh, it's a problem with the green screen, because if you hand that over, then yeah, they'll probably just hand you another one back. Fascinating, isn't it?
Yeah. Actually, that kind of raises the interesting question that always bugs me a little bit when you hear people, the anti-Bitcoiners, anti-crypto. I can't think of the guy's name that's big on gold.
Peter Schiff.
Peter Schiff, yeah. Saying things like Bitcoin has no intrinsic value. And I always wonder, well, nothing has intrinsic value. It's just that over a number of centuries, enough people who place trust in something, whether it's shells or tulips or
the only
metal dug out of the ground.
The only intrinsic value that gold carries is that there's sufficient people willing to turn it into pretty rings and jewelry. But ultimately,
but they weren't in the beginning. It was like, I'm sure, before gold became popular as such and trusted, there must have been something else.
Well, it's gone through several things. Yeah, I used to study this kind of thing, and I think it started off with those 7 stones in Papua New Guinea or wherever it was, which was the original evidence of ownership, and basically that they had these 7 huge stones on some island somewhere. Well, it was Papua New Guinea, wherever. And I think each day the tribe would get together and they'd agree basically who owned what. And everyone was aware of that. So the next day when you came back, you had the kind of conversation of, did you own that? Did you own that? But there's still consensus. It was one of the earliest forms of consensus, in fact, of proving who owned what and who owned which stone. And then it was realized, well, stones, bit difficult to move around type thing. You went on to things like tally sticks, which is where you basically had a ledger of how much you owed me and how much I owed you, and you netted it off on that. Then you went on to, as you say, shells and various other things. And then it was through trade, wasn't it? It was through merchants of originally, if you were a merchant in the UK and you wanted to get some cotton from the Far East or salt or wherever it was, then you'd have to sail your ship over with a load of gold on it, because that was considered nice and shiny and of exchangeable value. And that's where piracy kind of kicked in, and it's where Lloyd's of London kicked in, because it was an insurable risk. And then at some point, someone said, well, actually, rather than physically shipping all this gold out and then bringing the cotton back, why don't we store the gold in the same place, but give you a piece of paper to show you own the gold? And that was a promissory note. And then it was the whole thing. That's where like the whole tulip thing, the Dutch tulip thing grew, whereby that was promissory notes for tulips. And then there were more promissory notes than there were tulips. And that's where you had the whole collapse and everything. And it kind of just developed from there.
Wasn't it the Medicis who did the notes?
Yeah, there's from Venice. I think
that's right. Yeah.
Yeah. Which is why it's really funny. I end up getting involved in some weird groups right now to do with COVID and vaccine and all that. And they're all talking about the New World Order and how ultimately all of what's going on at the moment and all the lockdowns and everything is a government thing that was because of the Medicis, that they're basically trying to re-exert control on the planet and that. So it's like, yeah, okay, you might be right, but we'll see. But yeah, you're right. It was to do with the Venetian traders, and they did all that kind of stuff. Yes.
And they trusted them and then that's where the whole trust system was baked into it. Yeah. Because they were people of good standing.
Well, it was either that or it was the least distrust or mistrust,
or that they were able to exert force to say you will trust this note. Our currency, in effect.
Yeah. So it's funny, isn't it? It's all based on a form of criminality in a way, or of avoiding it. Yeah. But yeah, I find the whole thing. This is the thing that when you get people coming into cryptocurrency, what often ends up happening is that they actually go away and they learn about how money works, and they go, "Oh, I didn't know that." You know, what do you mean the Bank of England creates money from thin air and all this kind of stuff? I find it fascinating. You just go down this rabbit warren.
Has anyone read the Bitcoin Standard by Saifur Amin?
No.
It's a book that was written in the last year and a half or so, and it's meant to explain kind of the whole rationale. I mean, for everyone moving away from a gold standard and Bitcoin being the way forward. There's some talks on Amazon, YouTube on it that you can find. It's pretty technical stuff because it's all economics, goes way above my head, but I just wondered if anyone's come across it.
What was the author called?
Oh, Saifur, let me find it for you. The Bitcoin.
Oh, I've just Googled it, I think.
Saifur Amin.
Saifur Amin, yes, I see that. Interesting. Mm-hmm.
Yeah.
Do you want to pop that into the WhatsApp group?
Yeah, I will do.
That'd be interesting to show people, because this is the other thing as well. Occasionally, when we first started this group, in particular, Dean and I used to pop into the group things of interest. So my favourite one, I think it's called the Money Masters, which is a really boring, really slow 3-hour-long film about the Federal Reserve and the whole banking system and that, where it does explain fractional reserving and how money comes into being and how basically the Rothschilds are behind everything. But yeah, if you could share that, that'd be great.
Yeah, I will do.
I read it. I'm not an economics, I don't have an economics background, that's for sure. And yeah, I definitely read a good book about the history of money and whatever. I'll try and dig it out and post it on the WhatsApp group as well. I think it might have been Neil Ferguson or someone like that wrote it, but I'll dig it out. And it was certainly very good as an introduction for me. So maybe some people would find it useful.
That'd be great, Leslie, because this is the whole thing, that if you found it of interest and it's a level where you think, oh yeah, people can learn from this, or brilliant, throw it in there. It's always good. It's the idea of the group. It's about sharing knowledge.
Yeah.
Anyone got anything else happening then?
Just a thought, like where your thoughts of where Ethereum might be, say in a few years' time, not on price but on its usefulness, kind of, because I noticed that the Binance coin and the Binance network has really kind of skyrocketed over the last few weeks. Actually, not even that. And kind of, could that be the next thing that will replace Ethereum, and where everyone's going to look for that network, or are they a very different use case?
My understanding is that the Binance one, so we're talking BNB as the coin.
Yeah, that's right.
It's almost like a settlement coin on the Binance network. I think that's a fair way of describing it. With Ethereum, and I always try and differentiate between when people are talking about Ethereum, whether they mean the Ethereum blockchain or the Ethereum cryptocurrency, which supports the blockchain. And I often have a thing that I think the Ethereum blockchain is brilliant. You know, it was the first innovation with smart contracts. It's the primary platform for DeFi capabilities at the moment because everyone's running smart contracts on Ethereum and that kind of thing. But just because that's incredibly, amazingly fascinating and successful doesn't necessarily have any bearing whatsoever on the price of the cryptocurrency that runs on it. I keep arguing with people that they're not necessarily connected, you know, because people say, oh, well, if people are using the Ethereum network more, that'll increase the price of Ethereum. And I go, that's a bit like saying if people use £5 notes more, then it'll increase the value of a £5 note. Usage doesn't. But I think Ethereum, as in the platform, I think is fascinating and is going to keep growing. But that's what worries me, because if it eventually reaches the level of adoption it could do, I think it will have to address some performance issues before it gets any further. Because I think it could be a victim of its own success.
And I guess it's becoming quite expensive just to even use as a whole.
Which I think you're right. There's been some comments in one of the groups the other day about how it is that not only is Bitcoin getting very expensive to move around, but the cost of gas, which is what you pay to get things transferred through Ethereum, is getting more and more expensive as well.
Like I saw just for like a regular transfer, it was going to cost like 240 Gwei or something like that, and it's just like, how is that the case that just to transfer like get $10 worth, it was going to cost like $60 or something? Yep. It didn't really make sense.
And that's where, you know, I think there is this problem that if the price of making a transfer on a cryptocurrency exceeds a certain amount, then you're not going to do it. You know, because the whole argument originally around Bitcoin and that was, first of all, it was peer-to-peer without an intermediary. Great, that's still the case. But also that it was a low-cost way of transferring funds. So it got you away from TransferWise or PayPal or whatever. Whereas now it seems quite an expensive way of doing things.
And it's cheaper to transfer through the banks now if you really wanted to do that.
Yep.
Yep.
Well, I guess ultimately everything hits a level of...
They need to innovate and then rejuvenate it.
Yep. I agree, definitely. Chris, good to see you joined us.
Yeah, I'm really sorry. Every time I tried to get onto the meeting, it chucked me back to last week's meeting.
Oh, okay. Yeah.
So, but I eventually, after struggling, I seem to have got to the meeting. So good to see you.
Did you find anything interesting on last week's meeting when you kept going there?
Yeah, no, that was good.
Nobody was responding.
I've also, what was it, last week or the week before, I did the walkthrough on crypto wallets. I've done a slightly trimmed down version of that, which is just about the crypto wallet bit. So I've trimmed off the actual meeting session and a few other bits. So it's now under 10 minutes worth of stuff. If anyone wants to watch that, I've stuck it up on the YouTube playlist or channel or whatever. Because I've actually started watching it myself to remind me of how this stuff works.
Yeah.
Oh, that's good. So anyone got any other questions? Anything else happening? Or is it?
Yeah, I've got a question. So I've been using a bit of Uniswap. I've seen PancakeSwap. I've seen SushiSwap. I've seen whatever swap. There's also Pangolin. Kind of what, you know, all of these are these decentralized exchanges. They all look pretty similar because essentially they are the same code base and they've got the same front. What's the difference between them?
Well, between Uniswap and SushiSwap, I think what wasn't SushiSwap just a copy of the code base, as you say, with a few of the changes, and with Chef, forgotten what the person's name was, the person who's behind it. where they claimed it was going to be something completely different and then just stopped doing stuff on it and that. I don't ultimately know what the difference is between some of them. So I think, again, it comes down to just popularity drive some things.
Because they all use the same Ethereum network when you're going to transfer, so the gas fees are the same. I guess there's possibly different listing as to what you might find on one but not the other. But yeah, it just makes me wonder kind of what really is the difference between them. And then popularity, I guess.
I've stayed away from them, to be honest.
Right.
Which, having watched what happened with Sushi Swap, which is where I was beginning to get interested, and then I thought, oh, this seems a bit odd. Seems to have been a good decision. But if you've got the time and effort to invest in researching into these DeFi areas, then there's definitely good opportunities. But it's beyond my ability to spend enough time on it.
What has anyone else?
Sorry, John? What happened with Sushi Swap? I don't know any background to what went on. You just mentioned that when you saw what happened to Sushi Swap, I just wondered what actually did happen.
So, Mark, you want to comment on that? You want me to speak?
I don't really know that much of what's happened to Sushi Swap.
Yeah. All I know then, John, is that Sushi Swap was kind of, as you say, it was almost an equivalent of Uniswap. And there was a bit of promotion, a bit of publicity about it. And then all of a sudden, it looked like the originator started taking some funds out in some way. So it was like an ICO. And then they started taking some money out, and then the community kicked up a fuss on that. And then initially, Chef Sushi, or whatever his name was, said, well, I'm just paying myself for the work I've done. And then someone said, all you did was copy a load of code and deployed it. You didn't exactly do much. And the community kind of had a bit of backlash on that. And all of a sudden, Chef Sushi, or whatever his name is, said, oh, okay, I realize I might be wrong. I'll hand it all back to the community. Handed the code base over, I think, to Uniswap or somebody, and said, you can look after it, and the community can decide whether I get a reward, and here's my Ethereum address. And that was it, and then stepped away from it, I think. So it is now supported in that there's a community who are developing on it, which might be the Uniswap community. I'm not sure. But no, it's something I've not really been close enough to. I just saw it all go wrong and stay clear of it. Like many of these things, they take a lot of time and effort, and you're researching them and that, and it's whether it's really worth it.
I think that's what also happens with a lot of these projects, that the person that starts it, or the group that starts them, starts with maybe the best of intentions, and almost quite happy to do it for nothing. And then when they start having to spend a lot more time on it and start dealing with issues and complaints and everything like that, they start wanting to get paid for it. And that's when it starts becoming, actually, this is a proper business here, and I want my just rewards from it. And that then perhaps goes against the original ethos of what its purpose was.
I've seen that happening with the ICO craze, where you had it where it seemed to be very easy money to generate funds just by writing a paper, claiming that you knew what you're talking about and that. And a lot of the teams, really were keen to develop new and inspirational things, groundbreaking, all this kind of thing. Then they actually started discovering that these things are actually harder than they expected. Then they discovered that they're pushing against the boundaries of regulation, and so had to do all sorts of regulatory compliance. And then they ended up about a year down the road realizing, oh, well, we've still not passed these regulatory hurdles. Our code base is kind of there, but we've not quite got any customers yet. We've not got any revenue. I need something to pay for my house, blah, blah, blah. And that was the point at which several of them got tripped up, because they realized that there was this thing called taxation that none of them had thought about. And then you had the whole thing of, oh, well, I need to go and speak to an accountant about this. The accountants said exactly the same as what the lawyers had said, which is, I wish you'd spoken to us about this at the beginning. And then suddenly realised that for some of the projects, there was a substantial tax liability on the money that they'd raised from the tokens. And so I think a few of them just said, can't keep going then, and they closed down. Some of them, the regulators in the States, certainly, there were some big projects where the regulators said, you're operating outside, SEC regulations or whatever, so cease and desist and pay everyone back. I think that happened in China originally as well. I was involved in a project in China in 2017, just the point at which the People's Bank of China announced that ICOs were illegal and you had to hand all your money back and that. And we were just about to do a launch in China. And fortunately we didn't, because I'd like to go to China one day, but more importantly, I'd like to come home again afterwards. And so we actually killed the ICO launch there. So yeah, that, like some cryptocurrencies, some ICOs, I think that teams had good intent and not necessarily the ability or the business experience. Yeah, just happens. Just the same as any other startup, really. So any other questions before we finish for the day? We've got 2 minutes.
No questions. I just wanted to mention one thing. I don't know if you guys are aware of the Blockchain Expo, which is an annual thing, which this year is happening, obviously, virtually. I think I went to it 2 years ago in real life. Anyway, it's around about mid-March. I think it's 17th and 18th of March. I'll put it onto the WhatsApp group. But it's if you can make it, then it's a free event, and it was quite interesting when I attended a couple of years ago.
It's quite a good one. That I've presented at it a couple of times. Is that the one at Olympia or Earls Court? Or
I think it was, yeah, somewhere like that.
Yeah, I've presented at that a couple of times. It's quite good, but it's great. This is a great thing about it all being online now. You can sit in the comfort of your home and watch these things and dip in and out. So yeah, if you've got the link, because usually whenever I see any links, I usually post them to the group. I'm pretty sure
I'll put the link.
Yeah, that'd be good. Thank you. Cool. Okay, well, with that then, we'll close off for the day. Say thank you all for coming along. Any questions, do feel to stick them in the WhatsApp group. And have a good day. Chris.
Thank you much. I'll have a look on the playback.
Okay, excellent. You didn't miss that much. It was just a general interesting chat about, particularly about Ripple, I think, today. That was a good one. Right. Okay, have a good one then, folks.
Thank you.
Bye-bye.
Thanks a lot, Gary.
Bye now.